This is Ashley from Up to Speed Compliance Partners. You might have heard something about a Tranche 2. There have been rumblings for a while, but now it's almost here. Tranche 2, or the Australian Tranche 2 anti-money laundering AML reforms, means big changes coming in 2026 for several professions, including accountants. Tranche 2 doesn't need to be scary. Let me get you up to speed in this short video. Before we get stuck in, please note that this video is for general informational purposes only, and it is not professional or legal advice for anyone's business. I recommend consulting with us or another qualified expert before making any business decisions. This video isn't intended to scare anyone, these are just the facts. This is really important. AML is one of the most seriously enforced obligations for Aussie businesses. Since around 2015, there's been a regulatory crackdown on companies that have fallen short on their AML obligations by Australia's AML regulator known as AUSTRAC. These have resulted in over $2.5 billion in penalties for companies of all sizes. Tranche 2 will extend AML obligations to many professions, including lawyers, accountants, real estate professionals, conveyancers, company service providers, business brokers, and even jewelers. Tranche 2 also changes how AML risk is assessed and managed across the board, so those already regulated will need to refresh their approach. AUSTRAC has advised that Tranche 2 entities that ignore their new obligations will be an enforcement priority in 2026. What exactly is money laundering or ML? The idea is basically to give criminally obtained money a backstory that makes it look like it was obtained legally so it can be used anywhere. Your business's services may be abused to create this backstory. The relevant law, the AML-CTF Act, requires regulated businesses to take a risk-based approach to control the risk of ML through their services, and to report to AUSTRAC when a customer appears to be involved in ML, fraud, tax evasion, identity theft, or other criminal activities. Not every accountant will have AML obligations. Whether your firm will get them depends on whether you provide what are called designated services. These are services that AUSTRAC has recognized as carrying a certain level of ML risk. If your firm holds assets or accounts on trust for transactions, or provides company or trust creation services, then you have a high likelihood of having AML obligations. In summary form, the designated services include receiving, holding, controlling, and/or dispersing client money, accounts, or assets in support of a transaction, creating body corporates such as companies or trusts, facilitating transactions for equity or debt financing related to a business, or providing a registered office address or principal place of business for body corporates or trusts. The one-time and ongoing obligations of businesses subject to Tranche 2 can be pretty complicated, but remember, there is help out there. If you're a Tranche 2 entity providing designated services, then firstly, you should enroll with AUSTRAC by 1 July 2026. Registrations open 31 March 2026. By enrolling, your business becomes what AUSTRAC calls a reporting entity. Once enrolled, it's time for Step 2. Every reporting entity needs an AML officer, and they must be at the management level. That doesn't need to be the employee's primary or only duty, especially in the case of smaller businesses. As a third step, you need an AML-CTF risk assessment and program. These documents lay out the policies and procedures that you apply to manage your business's AML-CTF risk. They're customized to your industry and the designated services you provide. Fourth step, you must train your staff on your AML policies and make sure they absorb the training. Fifth step, you will need to undertake KYC/ICDD on your customers. That stands for Know Your Customer / Initial Customer Due Diligence. KYC is the better known terminology. Anyway, basically you should be comfortable with your customer's risk level before providing designated services. The sixth and last step is to report to AUSTRAC when a suspicious matter arises, such as when a customer appears to be involved in fraud or ML. If the new AML obligations aren't enough, they also come with obligations under the Privacy Act. AML reporting entities have privacy obligations when they provide designated services. This is even if the business is below the usual $3 million turnover threshold for the Privacy Act to apply. Your business will have to comply with the 13 Australian Privacy Principles or APPs in relation to the customer's personal information and sensitive information. There are similarities between the treatment of AML and privacy, with privacy also using risk assessments and a privacy policy that resembles an AML program. Thanks for spending this time on our introduction to Tranche 2. Reach out to Up to Speed Compliance Partners if you want help with your AML or privacy obligations. We have a strong compliance background, including AUSTRAC experience, and we'll be delighted to help you. Check out our website, uptospeed.net.au. Like and subscribe to our channel for more updates, and have a great day.